Hello, everybody. This is Noah and John, and we are from UrbanDigs, and it is Friday. So you're going to get your weekly Manhattan market update. John, let's get right to it. I'm looking at supply came in at 73.90. Looks like it's ticking up. Show me that chart.
Yeah, it is ticking up. No, that's nearly 5% increase in supply, and we've been seeing that off and on for the last few weeks, but now it's really starting to come into focus that the number of units on the market is growing.
Yeah, and let's not forget that taking into account things going off the market, things going into contracts. So there's a lot of moving pieces here. It's not just the amount of stuff coming on, even though that is a piece of the equation. We'll get to that in a moment. Let's go move on to Manhattan demand, pending sales 5240. It keeps going up. Johnny, show me that chart.
It does keep going up. So we're at 5240, as you said. That's another 2% from last week. But Noah, the interesting thing here is now that the pace of supply is outpacing demand here. So
Yeah.
supply is growing at a faster pace than sales. So that's an interesting point to make note of.
And John, I mean, we have been throwing hints out the last week and a half for anyone that will listen to us. All right, that there are sell signals forming. Are your sellers listening to this? Are they getting the message? Are they taking action on this? And you're right. And you're right. And if I look at the market pulse, John, that was at 0.72 a little while ago, and it's starting to tick down. I'm not saying that a tick down is a big thing, especially where we came from, but it's a sign. And when you look ahead a little bit, I think we're going to have trouble sustaining these levels of demand that have been going on at record levels.
Yeah.
We'll talk about that in just a second. Let's go right to the UrbanDigs dashboard. Take a look at those weeklies. John, I'm looking at supply 634. That's a big bump. Show me that chart.
Yeah, 634. That's a big bump compared to last week, which was 400. So you're looking at like a 50% bump on the weekly level. And Noah, that's probably the biggest weekly increase in supply we have had in look, it's the highest one on this chart I'm showing you right now, and that goes back to January of 2019. So it's been a while since we last saw over 600 units come on in a week, and that is really what's driving that supply higher. It's more new listings.
Yeah, and just as a disclaimer, guys, we look at this 1 week chart on the dashboard. You could see the big bump, John. I mean, you could see the big bump in terms of supply and deal volume. Everything had a big bump last week, day 7. That's included on this chart. Yeah. Tomorrow, that's going to get phased out. That's going to get phased out. So all these numbers are going to get significantly lower, and the 1 week trend is going to get volatile and change. So keep an eye on this weekly report. We got to watch this. In the meantime, let's go to demand. Do the same thing for demand. Contract signed 1 week, 395. It's now below the 4 handle, up a little bit though, but staying below the 4 handle. John, show me that chart.
Yeah, so it's a slight tick up from last week by like 2 contracts, but we're still very, very close to 400. It's still an amazing number. But this is the first time I think weekly supply has really stolen the thunder away from weekly demand. So even though we're close to 400 on a weekly level for contract signed, that supply number at 600 is really that's the story this week.
Yeah, and that's the change, right? That's the change. For so long, demand has been going faster than supply, and things are starting to change, and we got to keep an eye on that. And I got to just show you this 1 month, John, because when I see something like this, 1,790 deals signed in the last 30 days in Manhattan real estate, just under 1,800. This is crazy. This has to be a top. Like, I want to come back here at one point and look at this 1,790 30-day pace here, 1 month. If we're not. I mean, if we sustain this level, it's going to be incredible, but this is an incredibly active market out there. There are a lot of bids. So sellers need to listen to this. And again, this is just another signal that maybe there's a sell signal forming, sell into strength. That's what you want to do.
Yeah, totally agree.
Good stuff. John, move on to rentals. Please explain this chart for our viewers.
Well, we're just looking at this is the rental inventory. So how many units are coming on? This is, of course, a year-over-year comparison. So we're seeing some very tall bars here for April 2021. Of course, that's comparing to April 2020. But what's important to note here, Noah, is that we're still seeing increases in inventory as we head into the summer, pretty much across all bed counts except for the 2-bed. 2-beds are a little bit less, but look at those 1-beds, look at those studios. There's quite a bit of them right now.
Yeah, and it shows us the trend, and you did disclaim that we are comparing year over year, so we are comparing to April of last year, which of course was a crazy town. You could see it on the chart right down here, how low it was. So there is that rubber band effect. It's a normalization, but it's indicative of the activity. I think it gets interesting as we move on. I think it gets interesting as we move on. Here is the leases signed, year over year leases signed. So John, why don't you show me what's going on here?
Yeah. So again, I mean, look, it's tough to make year-over-year comparisons. So you see these gigantic bars that are dwarfing everything for April, and of course, last April was one of the lows for how many units were signed into leases, simply because we were at the depths of the pandemic and the lockdown at that point, and just nothing much was happening. But it's interesting to note here, Noah, that we're seeing a steady reflation in the number of units being rented.
Yeah. Yeah, demand is up. Activity is way, way, way up. We understand the distortion of year over year. Let's just get that noise out of the way. I mean, look, I could kind of see that it was dropping 77, 75% in the depths of hell. And I look now and it's up 450% and 430% and 320%. So we're definitely, the recovery is outpacing the decline kind of thing. It's very interesting. It plays into this whole recovery reflation thing. It gets really interesting when we show you this, John, and explain this chart, please, to our viewers.
So we're just looking at all these signs, and we're just kind of trying to get an average, an idea of what they look like, because we're just trying to smooth out that data. We're using a 6-month moving average. So this line is really the 6-month moving averages of how many units were signed into leases.
Right. Like, could we say pending leases?
Well, they're not pending leases. These are signed leases. They're reported as signed. So, yeah.
Okay. So if I go here, and this is where it gets really cool. So if I go here, let's just draw a line, right? Because I want to show people the trough of this, right? And you can see COVID, right? Obviously that's COVID right over there. But if I draw a line from the last 5 years, you could see the seasonality here. Here's seasonality 1, 2, 3, 4, 5, right? And of course, this is the 6th year, which had COVID. There was no seasonality. And if I look at where we are now, we're above that line of where we kind of should have troughed, where we should have troughed at, and we're kind of normalizing to where we should have been, right? So if I had to kind of draw out this line a little bit, the market really, it should have done something like this. It should have turned like this and then gone back up again like that. That's what it should have done. It didn't. It went straight down like this, and now we're coming back up, which begs the question, are we heading back up to this peak of the cycle, or are we going to kind of roll over here? I don't know, but it's just a very interesting view of this market and kind of projecting based on the technical analysis of this chart, I guess you can call it.
Yeah, it's a very good point. And I think you're going to find that answer reflected in the lease rates and the concessions. And these are not, the concessions are something that are really never publicized, because, it's sort of not a one size fits all kind of thing. But in general, the deals for rentals are not as good as they were 6 months ago, but they're still pretty good.
Right. And here is that rental prices are recovering, year over year change in rental prices broken down by bed count. And again, just like John said, this is not showing you concessions. It's just showing those last ask. And what I see here is you could draw a nice little arc, coming right around. I didn't draw that very well, but you could see what I'm saying. It'll come back up here, draw a nice little arc, and you could see where the trend is. The trend is your friend. The trend is your friend. So I think it's going to take time for those concessions to kind of fade to more normal, and then ultimately lead to rental rate increases, which again, I think is down the road. You know what I'm saying?
Yeah. Look, all that being equal, we were just talking about the sales market. Now we're talking about the rental market, but to see the rental prices recovering in the rental market is sort of helps balance the sales market a little bit. So it's a good thing to see this in terms of the sales market dynamics as well.
Right, exactly. Expect that rental market to really gear up when you start to see ground floor retail and commercial. When you see those two sectors come back, you're going to see the rental recovery really kick into high gear. This was really just our recovery from COVID. That's what we've been through. So we might go through a little pause, whatever, we'll see. But anyway, John Walkup, thank you for pulling up all that data as usual. I am Noah Rosenblatt. We are both from UrbanDigs. This has been your weekly Manhattan market update, and we'll catch you next time.